Welcome to Market Catalysts. I'm Julie Hyman, and we are 30 minutes into the U.S. trading day. So let's get to the three market catalysts we're watching this hour. First up, crypto plunging nearly 50% from its October peak. What investors need to know amid the selling and when it could hit a bottom. Plus, fear could be costing investors, why one financial advisor says to avoid emotional behavior during volatility and what you should do instead. And $1.7 billion expected to be wagered on the Super Bowl, how the sports betting landscape is changing ahead of the big game. Let's get a check on the markets here. We have a bounce back underway today. After all of the heavy tech selling this week, we're seeing something of a recovery today. The Dow Jones Industrial Average now up about 1.5%, about 760 points. The S&P 500 up better than 1%. And we've got the NASDAQ gaining about 0.75%. But I do want to look at the 5-day here because there we are not seeing the recovery recoup the losses that we had over the course of the week. So that bears mentioning here that even though we've got a bounce today, we are still seeing these declines. And indeed, if you look at, say, a 6-month chart here, really particularly for software, but this is when you had the peak for the NASDAQ, and we're still lower from that peak. So that's something to keep in mind. But digging into that NASDAQ 100 and looking at some of the movers here, it also bears mentioning that the bounce back that we're seeing is not necessarily a hugely broad-based bounce back. In other words, you still see a decent amount of red on the screen here, even though it is mostly green. Amazon is the worst performer here. That's, of course, after that company came out with higher spending plans than had been anticipated. We've seen this trepidation in the market around these big CapEx plans from the hyperscalers for the year. $200 billion is the number from Amazon that plans for this year, and the shares are down 9%. And then you see some other tech stocks under pressure as well. And then switching on over to software, which has been the area that has gotten so much attention over the past week, but really the past few months with the concerns that AI is going to eat into this business. Here too, you're still seeing a mixed picture today. So yes, you have some of these names that are bouncing back, but you also have some of them that remain under pressure. And again, I'm going to equal weight it here to give you a look at what is going on here. You know, stocks like Snowflake and Oracle are bouncing back here today, but Atlassian is still down about 4.5%. Zscaler, which is more on the cybersecurity side of things, is falling. ServiceNow is still declining as well. And if you look at the 5-day chart here, wow, I only see 2 stocks on this list that are higher on the week. So this just shows you the depth and breadth of the selling within software this week. Even as some analysts have said to us, you want to come in here selectively and start to do some buying. Maybe that's happening to some degree today, but we are still a long way from any kind of a recovery here in these software stocks. And speaking of which, let's talk about crypto too. Here's Bitcoin here and what we are seeing on an intraday basis here. That before was showing the 5-day chart, and indeed on the 5-day we continue to see this slump here with Bitcoin trading really breaking below level after level on the way down. So let's talk more about that and dig more into what's happening within crypto this week, because Bitcoin now hovering around that 68,000 level. The token struggling to find a bottom after the latest steep sell-off. It's now down nearly 50% from all-time highs in October of last year. Yahoo Finance's Ines Ferre is joining me, and also joining me is Andy Baehr. He's the managing director at Coinbase Indices. And guys, thanks for being here. So there's a lot to talk about, obviously, when we're digging into what's going on here. So Andy, I want to start with you and what's going on with the declines here and this sort of struggle for a bottom. But the velocity that we saw throughout the week, sort of picking up steam. What's going on there?
I'll just make one quick correction. CoinDesk, not Coinbase. So you owe 1 Bitcoin in the
I do.
The
oh my goodness.
There, but you said it perfectly at the beginning that the bear market really started in October with a big deleveraging event that was very crypto native. That was on the 10th of October. That gave the positive vibes of the bull market that it carried us through so much regulatory process. It ground to a halt very quickly. And the mood, I wouldn't say it changed to fear. And I think even before yesterday, we weren't really in a fear environment, but a skepticism and boredom environment where, crypto, all of crypto kind of as a not necessary, a not core asset, was feeling the same kind of lack of conviction that we're seeing in some of the other kind of future-based technologies like AI. So up until before yesterday, I think that it wasn't a happy market, but it wasn't a fearful market. What happened yesterday really was quite different.
And what made it so different?
I think we really had a second deleveraging event. You could see by the velocity and by the inclusion. I think probably the most interesting thing to look at, now crypto is a very, I guess they're very segmented. There's a lot of crypto native leverage activities. There's a lot of perps, a lot of trading on exchanges like Binance and Coinbase and our parent company Bullish. And then there's ETFs and ETF options. Yesterday saw really record-breaking volumes in the IBIT ETF and the IBIT ETF options. That really brought volatility quite high. There was a lot of option buying yesterday. There was a lot of option buying on crypto's biggest crypto native options exchange, Deribit, yesterday. So whereas even last week, gold volatility was higher than Bitcoin, which is remarkable in itself. Yesterday, you saw a lot of option buying, and it had the feelings of something that had some leverage in it being unwound. With all this motion going on with precious metals, it's not too hard to take those apart. That there was a lot of fast money that was darting for new homes yesterday. So it was a day where you really had to just watch and like one of your quotes said, a terrible time to try to make speculative trades for people. You never want to trade a market when it's this volatile, but you just have to watch and see if that got flushed out.
A lot of people were trading in the market when it was that volatile. That's to be sure. That's for sure. Ines, what have you been seeing here, and what do you read? Because I know you read very widely. The research is out there. You talk to a lot of people. Where is the sentiment sort of coalescing now as to what's going to happen next?
Well, Julie, Sean Ferre over at Fundstrat had said the sentiment seems to be a fear and fatigue, really, from crypto native holders, basically. But look, the worst, it's on pace right now for the worst week since 2022. We'll have to see how it goes because we are seeing a rebound today after yesterday, and yesterday was the worst daily drop since 2022. But certainly there has been sort of a sentiment shift since that October liquidation that you were just talking about, and whale selling also, which really started in the summer and really picked up sort of in the fall. But 10x Research also is a firm that does a lot of data. They analyze a lot of data and flows, and they have been talking about this overhang that is with overexposed holders of spot Bitcoin ETFs, and basically saying that their cost average is around 90,000, and many of them would have wanted to sell at higher levels. And so you have this overexposure happening. That's an overhang, as well as with Ethereum as well, which is what they've been seeing too. I will say that the feeling is that the bottom may have not been reached yet. I mean, we saw this big, massive drawdown, but there is the possibility that we're still going to be going lower. 10x is saying that probably in the summertime is where you see the real buying opportunity. Sean Ferre over at Fundstrat is saying that he's deploying some money right now, but he does see that there is a risk that you could go lower even.
Yeah, and that seems to be sort of consensus on Polymarket too. We were looking at the odds for that, and it looks like the majority here, 28% of the odds makers saying 55 will be the low just this month. So this doesn't say that the bottom won't be below that. It just says could fall as low as that this month. You've got the brave few saying that it's going to rebound to 85,000, 13% there. Andy, what about you? What are you hearing?
I think the medium term. I was at an event earlier this week that the Ondo Summit, and we got a chance to talk to a lot of influential people and people who know what's going on in Washington. The mood around the Clarity Act and its passage, which would be a fantastic catalyst, probably the largest catalyst for crypto in particular, is that would get done before Memorial Day. We don't have a personal call on that, but the consensus view or the modal view is that will get done, and progress is faster.
Is that really going to help the price, though?
Oh, absolutely.
But usually you see a rally into a news event. In any other regular asset class, you anticipate something, you buy in advance of that. Yeah. We have not seen that in this case, even as it seemed to be getting closer.
I agree. I think that the market would still treat, let's talk about the best case, the market would treat completion of Clarity Act almost as a surprise at this point. Maybe in the days leading up as evidence accumulates. But right now, there's really not a lot of market-based hope, right, that clarity would happen. It's going to be a big fundamental shift. On the skepticism side, there's a lot of AI parallel building. There's a lot of tokenization building, a lot of stablecoin building on the hope that there's a lot of demand out there for these kind of products. We think that there is, but again, it's speculative. You're kind of building things and hoping that they get consumed. And I think, again, anxiety and skepticism have crept into this idea of adoption and growth. Right now we're still, it's funny, crypto's still a young asset class. It's still something that is sitting on the outside, on the satellite part of most institutional investors' portfolios. It's not a core asset yet, and it can get flighty. So when people are experiencing paper losses, they tend to get a little anxious. So
yeah, and these are big paper losses.
They are big paper losses. The asset class, though, from a fundamental point of view, is as strong as ever. Its adoption is as broad as ever. It's every day that it lasts, it's lasted another day and it's grown another day. The education narrative continues to expand. The regulatory efforts continue to expand. And just blockchain technology with things like collateral movement and settlement of securities, that's not going to turn around. That isn't, it has oil tanker type speed and agility, but it is certainly moving. You can see a wake behind that.
And that's sort of independent of the Bitcoin price.
It's independent of the Bitcoin price, but crucially, right, a broader rally, those layer one blockchains, Ethereum, Solana, some of the more specialized blockchains like Avalanche or the Oracle companies like Chainlink, they will be part of that, right? Fidelity issued its first stablecoin. Tether issued a US compatible stablecoin. These, to the extent that these things really help improve things and present new features that people use, it's technology that, like AI, that's going to take a while for people to have that aha moment. But we feel stronger than ever that it'll happen. The Genius Act was a great start. Clarity will be another second piece.
Ines, I got to ask you about strategy also. We talked about it a little bit earlier with our Jared Blickery, but the pioneer of this whole digital asset treasury structure, it's not looking so great right now, right? I mean, so it's not trading at a premium anymore to the underlying price of the Bitcoin that it purchased. And that seems to be kind of the locus of a lot of the concern around what's going on right now.
Yeah, that's right. And we know that they had set aside that fund for that volatility that we would see in crypto. But when you talk about the cost basis, I mean, it is trading below their cost basis, their average cost of what they have purchased for. Yes, it's not looking good for digital asset treasuries in general. There is expectation that there will be consolidation, that there are going to be these companies that, especially the newer ones that came in at the tailwind of all this, and those may not survive. I mean, there may very well be large consolidation. This, of course, is sort of the poster child for these kinds of companies because they've been buying since 2020. But if you take a look at their stock, I mean, year to date, it's up, but year to date it's down 21%. Over the past year, down more than 60%. But Julie, I did want to mention one note that you were just talking about the market structure bill. I do think that is very significant for Bitcoin because we saw that when Coinbase had sort of said that they didn't like the version that they saw recently. We saw Bitcoin really reacting to that. And strategists are saying without a big catalyst, it's hard to see Bitcoin going a lot higher. You do need that market structure bill to go forward. The question is, will it or not, because of the midterms that are coming up as well.
Good point. Ines, Andy, got to leave it there. Thanks, guys. Appreciate it. And if you want to dig deeper into more prediction markets around crypto or anything else, have a look at the Prediction Markets Hub on Yahoo Finance, powered by Polymarket. Coming up, Under Armour has struggled but forecasts narrower than expected losses as it attempts a turnaround. We'll discuss it with an analyst next. Under Armour shares are rising after it lifted its guidance for the full year after forecasting a narrower than expected sales decline. It has been a tough past year for the athletic apparel retailer, which took a hit in April after Liberation Day tariffs were announced. The brand also had ended its 10-year relationship with NBA star Steph Curry last fall. Despite that, my next guest says the shares could be undervalued. David Swartz, Morningstar senior equities analyst, is joining me now. David, it's good to see you here. So, I guess I don't know if we could say these are better than expected. It's just not as bad as expected from Under Armour here. What's your take on this, that where they are in this process of trying to right the ship?
Yeah, so sales were down 5% in the quarter, and my estimate was down 6%. So it was a little bit better there. And the margins were a little bit better if you exclude a whole bunch of special charges, which is nothing unusual for Under Armour. So the quarter was a little bit better than expected. And the outlook for the fiscal year, so right now, Under Armour is in its fourth quarter. The outlook for fourth quarter seems to be pretty much in line, too, with expectations. I think people were gratified that it wasn't worse. Kevin Plank did say on the conference call that North America sales have reached a bottom. North America sales were down 10% in the quarter, and I certainly had expected that. It really has been a long, slow decline in North America, and I think that a bottom has been reached. But Under Armour is still well away from actually being a healthy company. This is still a company with declining sales and very minimal profits, and so it's a turnaround that really is still in progress.
To your point, the company says revenue this year is going to fall by 4%. It's not as bad as the 4 to 5% they were projecting before. A 4% decline is still not great. And even if something's at the bottom, it can bump along the bottom for quite a while. So, what's going to make it rebound off the bottom on the other side of all this? What does it need to do?
The goal for Under Armour at this point is to really try to elevate the brand. So Under Armour has struggled with having too many products that are really not premium products. They're really designed for the family channel, meaning like moms buying shoes for their kids and not really being sold to athletes at premium prices. And so Under Armour has really lost out to brands like On and Hoka in recent years that have really come out of nowhere and taken a lot of share in running shoes by putting out high quality performance products. And so Under Armour has to get back to that. The company historically has always had a strong connection with sports, but in recent years, it's put out a lot of products that were not big sellers. Its marketing has been all over the place. Under Armour has launched one effort after another and then later abandoned it. They've walked away from contracts. You mentioned Steph Curry. That relationship is ending. And at one time, the Steph Curry brand was going to be a major part of the company. This was like the future of Under Armour, and now it's going away completely. And Steph Curry's probably going to sign with another shoe company soon. And so the Under Armour has really been unfocused. The company's had like 4 different CEOs in the last few years. Kevin Plank has come back now, but and really what he wants to do is try to build the company back up based on his connections with sports. But there's a lot of work to do there because Under Armour has really been in a turnaround situation for 10 years. Its North America sales right now are lower than they were a decade ago, even though the sportswear industry is much larger. So this is a company that has lost its way over a long period of time.
So why do you still think it's undervalued? Or when you say it's undervalued, does that mean you think people should be getting in here? Or would you wait a little while until we get more signs that things are going more right?
Well, there are some positive signs, and Under Armour does have a strong balance sheet. It was never in any danger of financial distress. And so, when the stock was down at $4, it was really kind of a panic valuation. And so my fair value estimate right now is $13.60. So it's almost double the current stock price. I do think it's undervalued based on the idea that it will do better in the future. There's no reason that it can't. This is still an attractive industry in sportswear. It's a big market. It's a worldwide market, and Under Armour has been underperforming for a long time, but with Kevin Plank coming back, there is some stability now at least, and the company has the finances to be able to stick around for a while and see how the market develops and where they can exploit opportunities. And I think there are opportunities out there, and so it's really not something that people are going to get excited about because the company's been struggling for a long time. But as a value stock, I think it is actually inexpensive.
And David, we're at kind of an interesting moment right now because not only is Under Armour trying to turn itself around, you have two other big athletic apparel companies trying to do the same in the form of Lululemon and Nike, all of whom have been struggling to varying degrees. If you had to pick one that was going to do it this year, that was going to do it successfully, which one would you pick?
Well, I think both of them potentially are buys. I think Nike is quite undervalued right now. My fair value estimate is around $102 a share. And Lululemon, I'm close to $300. So I think both of them are undervalued. And at one time I had them as both being very overvalued. So I'm not like a permanent bull on them or anything like that. I do think that Nike probably has more upside potential. Lululemon is consistent. It has very strong margins and financials. It does face a lot of competition, as does Nike. But I think that, both of them will rebound. Nike may have more upside. Another company that I would throw in there has been struggling is Puma, which had a terrible 2025. So it has been a very difficult year for sportswear companies. And if you buy them when they're down, I think that there are, buying opportunities and potentially good returns.
David, good to see you. Thanks a lot.
Thanks.
Coming up, we're taking a look at some of the top analyst calls on Wall Street. Stay tuned. You're watching Market Catalyst.
Welcome back to Yahoo Finance. I'm Brooke DePalma. Let's turn now to some of today's top analyst calls on Wall Street. Today we're watching Amazon, Roku, and Snap. First up, Amazon. Wedbush downgraded its price target in the stock to $300 from $340 after the company said it expects CapEx spending to be upwards of $200 billion this year. That's up from $125 billion in 2025. The analyst wrote a note to clients that the significance of the planned level of spend is consistent with management's longer-term positioning. The average price target on the street for Amazon is $285. Next up, Roku. Oppenheimer upgraded the stock to outperform from market perform. The analyst said it sees a number of catalysts for the company, including the Winter Olympics, viewership, along with midterm election ads. Wall Street mostly bullish on this one with 25 buys, 7 holds, and 1 sell. Lastly, let's take a look at Snapchat. Stifel upgraded the stock to hold. The analyst said headwinds like its declining North America user base, lackluster ad growth, and lack of clarity on the Perplexity deal are priced into the social media stock. The stock is down about 35% year to date, and Wall Street, though, mostly on the sidelines with this one, with 10 buys, 36 holds, and 2 sell ratings. Keep it right here on Yahoo Finance. We'll be tracking all the market moves and top calls throughout today's trading session.
It's been a week littered with volatility, with fears over AI disruption sparking a massive rotation out of tech. So let's talk big picture and discuss how investors should react during times of uncertainty. Joining me now is Lauren Sprung-Mitlin, financial founder and author of Financial Planning Made Personal, for this week's FA Corner, brought to you by Capital Group. Larry, what a stressful time in the markets, right? And we have seen this selling pressure, but we've also seen this sort of unrelenting news flow this year. And so I'm sure you're getting a lot of calls from people who are freaked out and trying to figure out what to do amidst this backdrop, right?
Yeah, I think what you're seeing is, to your point, volatility is because of uncertainty typically. And we're seeing a lot of uncertainty, right? We had uncertainty around who was going to be the new Fed chair. We've had uncertainty around AI and tech spending. So that increases volatility. I think in terms of long-term plans and projections, those remain on target. If you're a little bit more of a trader, then you have to be able to digest these pieces of information as they come.
And when we look at the things that we maybe do think we know this year, I mean, we think we know there are going to be some rate cuts. The number, you can debate, right? You think, the economy is sort of on a little bit delicate footing, especially the job market. So how do you sort of take some of that stuff and form a strategy with it?
Yeah, so I think we're in alignment. We're thinking there's going to be rate cuts, maybe 1, maybe 2, who knows? That's out of our control. I don't know that the job market is softening as much as we're hearing and experiencing in the headlines. But I think there are certain areas that are definitely softening. I think when you look at the long-term effects or even the short-term effects of any of this on the markets, we have to see what the impact is going to be and what the projections are, right? And what I mean by that is we're not heading, I don't believe we're heading towards a recession, which if you look at some of this data, that's what, if you follow the breadcrumbs, that's what it's kind of leading us to believe. But I don't think we're there. Consumer spending is still pretty strong. Sentiment is a little bit down, but I think as a whole, I think the economy is positioned pretty well. And I think what we're seeing is a little bit of a pullback off of those COVID highs that we saw just a few years ago.
Okay, and then, I imagine some of the people who are calling you as all of this is going on and as they're worried want to lighten positions, right? I mean, what are you hearing from clients and what do you tell them?
Ironically enough, we're not getting a lot of calls because we position a lot of our families for more long-term perspective. Most of them don't have short-term really perspective. So what we've done is designed a long-term game plan for them and have already bucketed out their money for their short-term needs, medium and long-term. So where this volatility is really affecting them is more in that long-term. So they have the time horizon to really withstand this volatility. Their short-term bucket, which is really funding their needs and wants today and for the next 12 to 18 months, is fairly liquid and available and not at the risk of the market, so to speak. So those calls are not necessarily coming in, and we're not making fundamental changes. We are making minor tweaks to their portfolios because we definitely feel minor adjustments can lead to major improvements, but there's not this holistic need to make overarching changes because of the strategies we've implemented.
And I know you quoted a stat to me when we were talking about this. That's one that our friend Ryan Dietrich talks about a lot. I've seen it elsewhere as well, that if you end up selling and you don't participate over the long term in the market, your returns are significantly worse over time.
Yeah, they're abysmal. I mean, if you look at it, most down and up days are clustered together. Since 2000, if you invested in just the S&P, you averaged 9.8% return. But if you just miss the 10 best days over that period, just 10 days, your return goes to a negative 12.5%.
And that's on an annual basis.
Correct.
Yeah.
Correct. Yeah. So it has a wide swing and shows you the vast difference between staying fully invested and committed to your investment thesis versus trying to time things and going in and out. It's not that fruitful, especially most people are not professional traders that they can time that really effectively.
You mentioned minor tweaks. Like, how do you know where to make those tweaks? How do you think about when to do that in this kind of environment?
So we rely heavily on our investment team and what their outlook is. So for example, one tweak that we've made recently is looking at portfolios. 3 years ago, we started taking a position, our team, in gold. Now, we got a little bit lucky there, and sometimes you'd rather be lucky than good. But at this point, because of the huge run-up that we've seen there, we are trimming those back a little bit. We are allocating a little more to international, and peeling those, because those have experienced, explosive gains also. So it's a matter of, avoiding those instances where you want to let those gains run, but at the same time, you also have to take profits, otherwise you never do, right?
Right, and it's interesting. I was going to ask you where you're putting them. So it's interesting that going into international is the area where you're reallocating that capital.
Yeah, I mean, international is an area that we feel in the next 12 months is going to be pretty fruitful for the markets, even if the U.S. is a little bit softer. But again, we're looking, our team is evaluating this every day, and we're making adjustments quarterly to the portfolios. Now, it doesn't change their overall thesis for the family, but underlying in those specific strategies, we are making changes.
Gotcha. Larry, thanks so much. Good to see you. Appreciate it. And that was FA Corner, brought to you by Capital Group. Coming up, Super Bowl betting is on the rise. I'll talk to the CEO of FanDuel next. Plus, how Bad Bunny's Super Bowl halftime show could stack up to years past. That's next on Market Catalyst. An estimated $1.7 billion is expected to be wagered on the Super Bowl this year. That's according to analysts at Macquarie. It's a 2% increase from last year. Joining me now to talk more about it, Amy Howe, FanDuel CEO. Amy, I just want to start with, I want to get inside of FanDuel over the next few days. I'm just curious, what does the preparation look like amongst your team? Are you guys, 24/7 just preparing and working on handling the volume that's incoming? What does that all look like?
We are definitely 24/7. Obviously, it's the biggest sports betting day of the year, and we kind of start planning for the next Super Bowl the minute the previous one is over. But it's a gradual build up throughout the week. As the industry leader, we keep upping our game every year. This year, it's all about betting the game your way. We have 700 pre-live markets. But even if you haven't gotten your bet in before the game, we have an amazing assortment of live bets where you can kind of stay involved play-by-play. And we have a great social betting feature this year called Pass the Leg, where you can go in with your buddies and construct a parlay up to 25 legs. So there's kind of something for everyone. And of course, we always have amazing promotions. Every day this week we've had profit boosts. But we also have a $6 million jackpot. And if your player scores the first or last touchdown of the game, you get a share of the $6 million. So it's incredibly exciting, and throughout the entire week. We have our FanDuel party tonight that we're doing with Spotify, so it's a lot of excitement ahead.
I hope you're getting some sleep, Amy. So we are seeing this increase in betting volumes, obviously. What do you think is driving that? Is it just the sort of accessibility, more ways to bet than ever before?
Yeah, there's a tremendous amount of demand. If you think about the role that sports betting has played, it's fun. It makes the game more exciting. It's not just about who's going to win the game, but if you have your own parlay or same game parlay, you're really invested in the game. If you look at the data, fans are much more likely to watch the full sporting event or the broadcast if they're engaged in sports betting. And the technology's just gotten better and better. We've got a great partnership, for instance, with Amazon Prime right now for NBA and WNBA, and you can link your Amazon Prime account with your FanDuel account, and you can actually track your bets as the game is going on. So it's the technology's really developed, and it makes it more fun.
And Amy, as we've seen sort of more offerings out there, we've also seen more companies jump into the space. And so I got to ask how you're thinking about competition with the prediction markets, the Kalshi, the poly markets out there that have become really popular.
Yes, I'm delighted to say we have our FanDuel Predicts product that we have launched. It's available in all 50 states. We're only offering sports contracts in states where sports betting isn't legal. So for us, FanDuel Predicts is a great complementary offering to our core legalized sports betting product. And at the end of the day, our North Star and objective is still to safely legalize and open up all 50 states. If you look at the offering that we have in New York or New Jersey that has been legal for quite some time, it's much more robust, right? As I said, for the Super Bowl, you've got hundreds of different markets. You can parlay just about any bet you want. You can go in and customize the lines. So that's really still the objective. But in the meantime, as the industry leader, since we have an opportunity to offer a safe, regulated product in markets where sports betting isn't legal, it's a great opportunity for us.
Amy, can you give me any sort of numbers around the reception you've seen for your prediction markets offerings as of yet? I know when we saw some of the sports offerings rolling out on some of those competitors, they were releasing the numbers about the adoption. So I'm curious what you guys are seeing.
It's early days. We're in a closed period, so I can't comment specifically on numbers, but we're very pleased with how the product is performing in the market. We've got a phenomenal partnership with the leading exchange provider, the Chicago Mercantile Exchange. And so, we keep adding more sports, more combos, and more opportunities for fans to engage, not just in sports contracts, but we also have in all 50 states, you have an opportunity to engage in contracts around financial benchmarks. So where's the S&P 500 going to close, or the price of gold, political events, cultural events like the Grammys. So it's a pretty broad offering, and we're very happy with how the early days are going.
Yeah, we watch those financial ones pretty closely. I'm curious about prop bets for the Super Bowl. If there are any that stand out to you, or any that are particularly popular that are fun this year.
Well, prop bets are always very popular. Yeah, I'd say probably more than 50% of the bets will be prop bets, and it's really the consumer's way of expressing what they think or what they hope is going to happen during the game. This year, you always get a lot of activity on the quarterbacks. So Drake May and Sam Darnold are popular, as Jackson Smith-Njigba, Stephon Diggs. So there's a lot of very popular props in there. And the fun thing is on FanDuel, you can actually go and customize a lot of those player props. So if you think the house got it wrong, you can go in and you can figure out, how many touchdowns Sam Darnold is going to throw for. So lots of opportunities if you're engaged in the game.
Well, Amy, thanks for your time. Have a great weekend. Have a great game.
Thank you. Appreciate it.
Thanks. Well, if you're like me, the main event isn't actually the game, maybe not even the commercials. It's probably the halftime show. This year is Bad Bunny, of course, which has been much talked about. It could end up being the most viewed ever. And Brooke De Palma is here with me now as we look ahead to the big performance. You and I, being numbers girlies, right? We're interested in the music, of course, but we're also interested in the sort of halo effect and what the numbers are going to be around the Super Bowl halftime show and how many people are going to watch it, for example.
Yeah, and let's be honest, while you're actually watching the game, I mean, there's like a group of people who are eating the snacks, that's mostly me, and then when the Super Bowl comes on, we're running over to see the event. But take a look at how many, what artists actually have gotten the most attention. It was quite surprising. You think about how long this has been going on. You think about who's gotten the most viewership. It's actually most recent years. We have Kendrick Lamar last year, Usher and Rihanna. So really the most recent years.
Right.
But then surprising to me, about 11 years ago, Katy Perry, and before that, Lady Gaga. So it's interesting to see that it's not just the most recent, so maybe viewership numbers going up, but also standouts like Katy Perry and Lady Gaga.
Well,
now, the expectations are high for Bad Bunny.
And I wonder, though, like, is it just the most viewed games that end up having the most viewed halftime shows?
Yeah, like, how do you know how many physical people are actually tuned in during those moments?
Right, because it's not like you're watching the game and you turn it off if you don't want to watch the
100%.
halftime show.
It stays on.
And conversely, if you're not watching the game, do you try and time it and turn on the halftime? I think there probably are some people who do that.
I'll admit, sometimes I did that.
I was actually talking to one of our makeup artists this morning who is a Bad Bunny fan, and we were sort of Googling, trying to game out when the halftime show was going to hit.
Ooh, like the exact timing.
Because
that could be a bet in itself.
8:30 was the estimate.
Okay.
And so if you're not watching the game, apparently that's when you want to turn it on.
All right.
Did you know that when artists play the Super Bowl, they do not get paid for that gig, which is
the amount
kind
of time and effort that they probably put into this?
Right, but they get paid in other ways, right?
Okay.
So take a look at some of the streaming bumps that we have seen people get in the past. And this is sort of around the performance, in some cases leading up to and then after.
Because you want to like get to know the songs before.
Right,
yeah,
exactly.
Especially with Bad Bunny, I'll admit.
Yeah,
I've been practicing.
You and I are like glued to Duolingo to try and learn Spanish in the next few days before this happens. But so we've seen, huge multi-100% bumps for these artists, which is also interesting. And in some cases, they get a bump for tours as well. For Bad Bunny, the bar is already high, because if you looked at his touring numbers for 2024, for example, and he's still on tour now, I mean, his tour is huge. In 2024, $211 million is what that tour grossed. More than 750,000 people or tickets were sold to that. So, and they were already, the average ticket price was nearly $300. So he was already getting those kinds of grosses. Actually, after the Super Bowl, the following Friday, a week from today, he's going to be in Buenos Aires, resuming his tour, South America, Australia, and then to Spain.
Yeah, and contractually, I believe that he hasn't been able to do performances leading up to this halftime show. At least on the Grammys on Sunday night, that was like sort of a bit leading into that.
Right, exactly. That makes sense, that the NFL wants to guard their eyeballs for their
exactly.
big show.
Just wait, let it all build up.
Yeah.
But think about this, Julie. When you think about the odds of how exactly this will not just play on the night of the Super Bowl, but then of course now we can stream it on YouTube after.
Yeah.
So when you think about the betting odds, according to Polymarket, about 11% chance. The odds here are about 11% chance that this will become YouTube's most viewed halftime show on YouTube. So sort of the betting odds getting in on this to try to understand what are the implications after the Super Bowl when it comes to the most viewed. We were just watching Katy Perry's 2015 performance. You can tune back into Lady Gaga, Kendrick Lamar, and others. So right now the odds are saying that this will actually not be one of them. It's about 90 cents you can bet on it that it will not be the case. That'll be the most viewed after. But
well, and
the amount of attention this got, I'm surprised to see this.
Yeah, I mean, well, it's not versus other halftime shows though. It's versus any YouTube video. So I don't know. I guess we'll have to see about that. But as we know, people love their prop bets and betting on everything.
Yes.
So they're also betting on things like, what songs is he going to perform? Again, I can't claim to be, very super familiar with his oeuvre, right? With all of his songs. I like them. I will be dancing during the halftime show. But these are some of the songs that people are betting on.
And a lot of these, like Titi Mi Pregnuto, if I said that right, apologies if I did not, but this is one of his earlier songs in 2022. The first two are his 2025 songs.
Right.
So some of his newer albums just goes to show that for years, he's sort of been building up to this moment with many of these songs well known among not only the Latin American community, but also among so many viewers.
Right, and apparently La Mudanza got my intel from that same makeup artist who was a fan of his, is a big sort of love letter to Puerto Rico. And so the bets on that are that he would play it, sort of playing up his heritage, right?
Yeah.
And a call out to Puerto Rico, where he also did huge shows.
Yeah, those were big numbers.
Exactly.
Let's break that down. If you think about his Puerto Rico residency, it was about 31 shows, a 30-day residency from what I understand. And $11 million in ticket sales. Not quite Taylor Swift's Eras tour, as people like to compare every tour to now.
But
this was instrumental.
That was in one place.
Yes, absolutely amazing. Blow away bonker numbers. $200 million in direct impact on the economy. But then also, you heard about all these other implications of local artists getting into their recording studios, local bookstores, even real estate agents said that this bumped up people wanting to move to Puerto Rico.
Cool.
So really, a huge impact. I'm excited to watch.
I like Bad Bunny better than Taylor Swift. Don't at me. Thank you, Brooke. Appreciate it. And thanks so much. Have a great weekend, everybody. That's it for Market Catalyst.